Hey everyone, good morning. All right, so I know it's 11:15, that is okay. I am here. We have already had a full morning at Modern Nest with all the things, and I've already been out making deliveries of option and earnest money checks. So it's just been a crazy morning, but I am here. Welcome. If you guys are joining us for the very first time, I'm Mariana Pearson. I own Modern Nest Real Estate Group, this group that you are following. Every Thursday at 11 a.m. or somewhere between 11 and 11:30, I guess, we go live on a new topic. It's usually a real estate related topic. Sometimes we're going to throw in some fun stuff, but I go live to talk to you guys about all the things, just to educate you, whether you're looking to buy or sell a house anytime. So whether that's 3 months down the road or 2 years down the road, I think it never hurts to be more educated than less educated. So hopefully you guys are learning from this. I know we have some people that are regularly coming in, and it's been really great to get your guys' feedback so far, because I've been doing this for about 2 months now, I guess a little over 2 months, and I've had some great feedback, so thank you guys for that. So today's topic's a little bit different because we've been talking about sellers. I still have my seller home tip little board up, but today we're going to talk about something for buyers. Before I do that though, I decided that I want to start all of my videos by doing some sort of shout out. So someone who maybe had some good news, or any of my first time home buyers, or if I learned something new about someone in the last week, I just want to shout them out. So today I'm actually going to shout out my husband. He's in the other room, so I don't know if he'll be able to hear me. Yesterday was our 3-year wedding anniversary, so he has officially not just put up with me for 3 years, but actually 8 years, and 7 of those 8 years I have been in real estate. And so if you know all the jokes that come along being married or being in a relationship with a real estate agent, you're kind of married to, you are a real estate agent also, and you're kind of married to someone a little crazy. So again, I don't know if he can hear me, but shout out to my husband for putting up with me and a real estate agent for so long. And thanks, babe. Love you. He's so supportive of my business, so I love it. Okay, so today's topic, like I said, is a little bit different. We're going to do some math. So I've got my handy dandy, and there's my mom-in-law. Hey, Tammy. I've got my handy dandy little clipboard, super official, super techy, modern, right? But it's going to help me do some math for you guys today, because what we're going to talk about is the historic interest rates and what that means for you guys as a buyer if you're looking to buy this year, or you just want to get an idea of how historic interest rates are really impacting buyers and their ability to purchase. So you've probably heard, hopefully at least, you've heard that our mortgage rates are at historic lows. And we'll get into a minute here, or we'll explain here in a minute what that means. But even through this global pandemic, we are seeing that buyers are still purchasing homes because of these low interest rates. So it's really helped out during this time. When the global pandemic first happened, everyone was unsure of what was going to happen. Obviously, the economy took a little bit of a different turn, but our real estate market has not slowed down whatsoever. It's been actually crazier than ever and busier than ever. And it's because our buyers are taking advantage of these low interest rates, which allow sellers to be able to still sell their houses. So it's really kept our market alive and going really well. So if you've never really thought about the interest rates, or like I said, if you're curious about buying in the next year, that's why I wanted to dive into this topic today. So what does the historic interest rate, what does that really mean? So let's answer that first. So what really defines this being historically low, or the rates being historically low? So I went back, I did some research to give you guys some numbers, and really just look at the interest rates over the last 5 decades and get an idea of how they really are historically low right now. So let's start off there. So in 1970s, the average rate was at an 8.86%. So the interest rate was 8.86%. In 1980s, the average rate was at 12.7%, which is crazy. 12.7% is what people had for their interest rates at one point, and that's just the average. That's not even the highest. 1990s, the average rate was at 8.12%. in the 2000s, the average rate was at 6.29%. So 2000s average rate was 6.29%. 2010s, the average rate was 4.09, and keep in mind that was right a little bit after 2008, so when the market did crash. So 2010s, the average rate was at 4.09%, and then as of June 2020 of this year, in 2020, the average rate was 3.21%. So I have had several buyers closing I've had one at a 2.99. I have someone pre-qualified right now for a 2.75. I have a buyer at a 3.125. I have buyers at, 3.5, which is still not a terrible rate. I mean, it's still below the average from the last 10 years. So our average right now is at 3.21%. Okay, so that's the math that we are going to use for today. And what I'm actually going to do is I'm going to compare what your buying power looks like and your mortgage payment would look like if you have a rate of 3.21%. And then I'm going to compare that to as if it was a whole point higher, so at 4.21%. So I'm going to do that math just to show you what the difference is if you had a rate literally only 1% higher, and how much of a difference that can make when it comes to buying a house. First of all, also, I just want to say we are so happy, and I'm so happy that we are not reliving those 1980s rates at that 12.7%. That is crazy. But if we had to deal with that today, that would definitely we'd be talking about a whole different market. So, okay, let's go ahead and get started and do this math. So what we're going to do is, the scenario is that you are buying a house at $350,000. Okay, so that is a pretty good average price point, at least here for Dallas. So I want to start there. So we're going to do $350,000. So you see, and I even flipped my camera this time so you guys can see this correctly. So that is our sales price, and you're looking to put 5% down, which is the minimum percentage down for a conventional loan. And Nick, I don't know if you're still watching, but this might be a good scenario for you. So $350,000 is the sales price, 5% down. And the interest rate that we're gonna run is the 3.21%, which is our average for 2020. So I used a mortgage calculator, I did some quick math, and it came out to a monthly mortgage, not including taxes and insurance, by the way, so that's not included in this. It's just for your principal and interest. That gives you a monthly payment of $1,439.78 per month, okay? So again, we had a sales price of $350,000. You put 5% down. This is your interest rate. Sorry, I've got chicken scratch handwriting, but 3.21% is your interest rate, which gives you a monthly payment of $1,439.78 per month. Again, not including your taxes and insurance. All right, so that is if you were to purchase in today's market with the interest rates at that price. So let's now do the math. Let's jump the rate up 1%. So if our rates go up another 1%, again, this is just to show you guys the difference that 1% can make. Let's do it at a interest rate of 4.21%. So same thing, $350,000 for the sales price. You're putting 5% down, the exact same amount down, and now your interest rate is 4.21%. Your monthly payment, again, not including taxes and insurance, right? It would be $1,627.93. So again, I did a quick math on a mortgage calculator, which, by the way, mortgage calculators, you can find them by just Googling or anything like that. Ask your loan officer. You can always ask me. I can run some rates for you. I will tell you guys my tip of the mortgage calculator that I use, and actually a lender gave me the idea to do this, and I do not, not that I don't support Zillow, but it is the Zillow mortgage calculator is the one that I use. It's really user friendly, and it's really pretty accurate actually, and I like that it breaks down. It even breaks down like how much you would be paying in interest, how much you would be paying in and taxes and insurance. And then you can also see your amortization table, which basically shows you every payment you will make for the life of the loan. So I do like the Zillow mortgage, but not the Zillow's estimates. Let's just throw that out there. Okay, so just by increasing that interest rate 1%, everything else staying the same, you are increasing your monthly payment already by $188 a month. So $188 per month is what you would be paying more just by waiting when the interest rates come up 1%. So that's almost $200 a month. That's almost $2,400 in 1 year. And if you plan to be in that house for 10 years, that's easily $24,000. And for the life of that loan, you're looking anywhere between 40, 50, I didn't do that math, but for the life of that loan, you're looking at $50,000 in extra interest just by having that 1% interest rate. And of course, you always want to try to get a fixed interest rate, right? I feel like I need to have maybe a whole nother episode on interest rates and fixed interest rates and how they work, maybe bring in a lender to talk to you guys about that. But adjustable interest rates were why our market crashed in 2008, or part of the reason. And so making sure you have a fixed rate to where that is your rate for the life of the loan, right? And so again, I just want to show you guys what that looks like. So right now with the historically low rates, you really do have what we like to call more buying power, because you already at a $350,000 price point have a more affordability, because ultimately I always tell my buyers it really depends on what your monthly payment is going to be. Most buyers, again, this maybe is off topic, but most buyers are actually pre-qualified for much more than they actually want to spend, because this buyer that's purchasing at $350 might actually be pre-qualified all the way up to $400,000. So what I always tell my buyers is talk to the lender, ask them what the monthly mortgage is going to be, because that's ultimately what you have to pay and what you need to feel comfortable with making payments, right? Okay, and then, just for fun, I did do some extra math for 1980. If we were to be doing this at a 12.7% rate, which was the average again for 1980, you're looking at a monthly payment, again, not including taxes and insurance, of $3,600 a month, which is bananas, which is crazy. So your affordability in 1980s was definitely not what it is today. Of course, in the 80s, the cost of living in general was totally different, including prices of homes and things like that. I mean, everything was, the cost of, a milk carton, all that gas, all that in the 80s was different than what it is today. And of course, our income was also different. So it's all relative, really, but just showing you guys, if you were to buy a house in the 1980s for $350,000, you're looking at almost doubling your payment instantly just because of that interest rate. So the whole point to all of this was really just to help you guys if you are trying to decide if right now is the right time to buy, if it makes sense for you to buy. Again, being able to take advantage of these historically low interest rates is definitely an advantage when it comes to buying right now. But hopefully this does help you kind of make that decision a little bit easier. I always like to run realistic numbers just to kind of show you guys what that looks like, because even though we go around saying, oh, historically low interest rates, take advantage, and we get you all hyped up, I want to show you, like, no, really, like, you could be saving some serious money just because of that lower interest rate. It does play a big part in your monthly payment, and it does it does save you quite a bit of money just by having a lower interest rate. So I wanted to do that math for you guys really quick. The last thing on here, I've already told you guys about my mortgage calculator tips, so you know about that. But if you guys want me to run some quick math for you, if you don't feel comfortable going and getting the mortgage calculator yourself, I'm always happy to do that for you guys. I do it for buyers all the time, so I can run those numbers for you. If you are looking to sell and also buy and you want to look at those scenarios, I can always run those numbers for you. I always try to at least start kind of there with my people who are looking to sell and to buy, because of course I want it to make sense for them, right? I want to make sure that they have equity in their house, that they are looking at a payment that's going to be comfortable, that after they put a good amount down from the sale of their house. Always working those numbers, because I think that that's super important. So anyways, guys, if you guys have any other questions for me, or if you want me to look at anything else for y'all, please let me know. I'm happy to answer those for you guys. Hopefully you guys are out there staying safe and still enjoying the summertime as much as possible. It's just so hot here in Texas. It's crazy, but our market is doing really well. And also, if you're watching and you're from out of state, just keep in mind, even though we are in the DFW, Texas area, I do have connections to agents all over the U.S., actually outside of the U.S. even. So if you are thinking about buying or selling and you do want me to connect you with one of those agents, just let me know. I would love to know where you're at, where you're living, or where you're trying to buy, and I can always find you an agent that can help you with that future home purchase. So thanks again, guys, for tuning in. And if you have anything else for me, please let me know. I'll see you guys next week.